fire. Let's get higher. I'm gonna set your place on fire. Let's get higher. I'm gonna set your place on fire. Let's get higher. I'm gonna set your place on fire. It is so hard, I gotta fake. I can make
So welcome back traders to another exciting live stream. We are currently on the gold chart on the 4-hour time frame and the 1-hour time frame. So as I said, if you are early on the live stream, I closed the trades we took yesterday on gold on the live stream. So we have almost 5% risk to reward, 5% up in profit in just this trade. So we are totally 15% up on this account. And the way we end, let me do a breakdown of how we took the trade. Yesterday price was pushing up. Yesterday price was pushing up. Yesterday price was pushing up back to this level, this 4-hour time, this 4-hour level, this 1-hour level. And when price got to the level, we started seeing rejections and price was really reacting. So what I did is that I set a sell stop order around this level here, below the candles, and I said to myself, if price is going to reverse and continue down, then that's the only time I'm selling the market. So I set the sell stop below this candle here. The candle was open at that time, so I set it below the candle. So I let price do what it wants. As long as price continue pushing up, I won't be triggered into the trade. But if price turn back and reverse into bearish trend, that's the only time I get triggered in. And that was what happened. Price rally around that area for a while. These are 1-hour candles, and finally turn bearish, continue down. So I close my trade around this level. This is a 1 to 3. I let the trade run, not set my trade to break even. I just let it run and I just close it a minute ago. So that's why I said you should try using the sell stop order or the buy stop when entering your trades. It's very important. It helps you set your trades and wait for it. You don't get impulsive in taking your trades when you use the buy stop or the sell stop order. Try taking 50 to 100 trades using the buy stop and the sell stop order and see if it is something you want to add into your trading plan. So it's very important. And I said yesterday on the live stream, you don't want to be the first in the market. Once price start getting to a level, you don't want to be the first to jump into a sell or a buy. Being the second or a third is still okay as long as you are making money. The only difference, you might have a more bigger stop loss, but at least you are in a safe position and your probability of winning increases. So you don't want to be the first in the market when price start pushing, price start getting back to some of this key level. Being second is okay, or use a sell stop order at key levels so that you will be in the right direction of the momentum when price start pushing. And if you're just joining us, you haven't subscribed to the channel, subscribe to the channel now. Like the stream, it takes you a second to do that, and it does a lot more for the channel. So do that really quickly, I really appreciate. So let's go back to the analysis on gold. So currently we are on 2 time frame. Here we are on the 4-hour time frame and the 1-hour time frame. So on the 4-hour time frame, you can see we have marked our level. We have marked our level here, And the reason why we mark this level is because of the weak rejection. We have one, price has been here before and it's still coming back to respect that level. So these arrows I drew, most of you guys understand why I drew the arrows. If you see this, if you have been trading for a while, you understand that this is a consolidating market. Price is moving sideways. Price is not making a clean trend up or down. For 2 days, price has been moving sideways. So this is not a clean trend. And some of you can identify this as a double top pattern. It's the first top and the second top. But price is still not breaking below or above. So we consider this as a ranging market. So if price is not breaking above, price came here twice, let me say 3 times. This was the first time price came to this level. Price came to this 1, 2 and 3 times and it's still failing to break that level. So we identify that as a strong resistance level in the market. Strong resistance level in the market. That's why we draw this our highs, our higher level, and the same thing apply here. Price is failing to break. It has been here before, and when you draw out those levels, you can see that the market is moving sideways. It's not making clean trend. It's not breaking up or down. So we mark out these arrows. What we expect the market to do today in theory is to break this level below, come back for a retest of that area for a continuation down back to some of these lows here. But as you can see, even though we anticipate a break of that level, we haven't taken a sell, we haven't taken a trade yet. We are still waiting for price to break that level, because I was already in the trade, in a sell. This trade I show you guys, I will have hold that trade and see if price will break. But I'm already 5% up in profit on that single trade, and that was why I closed my trade. And I'm just waiting. Right now on the 1 hour time frame, the market is pulling back. It's pulling back. Now after it got to the level of my C reaction, price might pull back to around 50% retracement. Sorry about that noise. Price will pull back to around 50% retracement of that move before a continuation down or back to these highs again, because that's how the ranging market moves. Taps the low, taps the high, taps the low. That's how the ranging market moves. So currently, I personally am not taking any trades right now. The only high probability trade I can still take a buy, but I don't usually. The ranging market, there's a very low probability of winning if you are trading a ranging market. The probability of winning decreases, and I'm not really a fan of trading the ranging market. It's not part of my trading plan. I only take high probability trade at key levels. So before I take a trade on gold, I'm waiting for a clean break below this level. Clean break below the level, maybe from the 1 hour time frame. If I can identify the clean break and a retest, when price break that level and comes back for a retest, that's when you enter a sell. Part of my trading plan is I always take the break and retest. But if you're a breakout trade, you can set a sell stop order slightly below the level. If you're a breakout trader, you can set your sell stop below the level, below this area here, so that you get trigger in the way we did on this last trade I took here. You can only get trigger in when price start pushing down. So if you're a breakout trader, you can set the sell stop order below the level here. But if you want a break and retest, you wait for a clean break of that level, a retest of that structure, and only then will you take a sell and place your stop loss above the level, above the structure here. So that's two strategy. If you're a breakout, set the sell stop order below this level. But if you are a break and retest trader, wait for a break, a retest of the level before you can get a continuation down to back to some of these lows. So I personally am going to wait for a break and retest. I want a clean break, strong close below that level from the 1 hour time frame candle for me to be able to take a sell. That's how I trade. I usually take more of the break and retest. So that's the analysis on gold. It's very simple. As I said, you don't want to be trading the ranging market because it's a low probability trade and your chance of winning decreases. I'm not saying you can't take it, you can take it, but just know that your chance of winning decreases. You can buy from below, buy from the lows back up to the highs and sell here down, but probability of winning decreases. I want a clean break of that level for me to take a trade on gold. So that's the analysis on gold. If you're on the live stream and if you're learning, you're gaining any value from these streams, you should consider subscribing to the channel. Like the stream. It takes you a second to do that, but it shows me that you guys are learning and I should keep doing these streams. We have a lot of viewers and a few likes. That's how you show me you appreciate the streams, and I will keep doing them. So it takes you a second. Like the stream, subscribe. Here we share with you tips on how to scale your personal account and pass your evaluation challenges. We share with you tips on lot sizing, risk management, patterns, strategies, and how to approach your markets when you come to the market in the morning. And if you want to be part of our Telegram trading community, you should chat me up. There's a WhatsApp link in the video description, and I'll add you to the group. And we also have a VIP group signal on Telegram and WhatsApp. If you want to be receiving 90% accurate signal, daily signal on gold or other currency pair you trade, if you chat me up, it's a membership, it's a monthly membership. So if you want to be part of the VIP trading signal group, you should chat me up and I'll talk about it. We'll add you to the group. But the Telegram group membership is free, but the VIP is a paid membership. But you receive daily signal on any pair you trade. So that's it. So right now, all we are waiting for is, as I said, a clean break of this 4-hour level. And as I always say, you should always mark out your key levels using the higher time frame. Use the 4-hour time because we are intraday traders. We are not big investors. We only trade for few hours a day. So we are intraday traders. So you don't want to be scaling up to your daily time frame, or your weekly time frame to make your analysis. You won't get it right. Use the 4-hour time frame down. We are intraday traders. So we mark out our level. Let me still share this tip with you guys. For most of you who don't know, we use the 4-hour time frame to mark out our key levels when we come to the market in the morning. So we use the 4-hour time frame to mark out our lows, we identify our lows as where price has been to before and price has come back to, or we anticipate price to get back to. So that's our key level. So we identify 1 week rejection. Price has been here and left a week, came back again and respected that level, and still coming back for the third time and respecting that level. So that was why we drew this low, and the same thing applies here. You can see a 1 2 1 2 2 taps. Price has been here before, sorry about that. 1 2, and this is the third tap. That's why we draw out this key level. So that's how you draw your key levels. Mark out where price has been to before and when price has come back to, or you anticipate price to get back to. So that's how you mark your key levels. We use the 4-hour not to enter a trade, but to mark out our key levels. And after we have done that, we scale down to the 1-hour time frame to see the behavior. Remember, this is the same pair, we are still on gold, but this is the 1-hour time frame. So when we scale down to the 1-hour time frame, we identify this as a ranging market. Price is moving sideways. It's not making a clean break above or below. Above or below, yeah. So we use the 1-hour time frame to see the behavior of the candle. You can see multiple week rejection, immediately price gets to that level, and the same thing is happening here. So we see the behavior of the market by using the 1-hour time frame. You can see multiple week rejection as soon as price gets to this top, this level here, the area, the level we have marked. So this we use the 1 hour for the behavior. Then our entry time frame, I personally use the 15 minutes to see the for my entries, but most people use the 5 minutes or the 1 minute, but that's still okay. If you want to get early signs, you can use the 5 minutes or the 1 minute. The 1 minute mostly when you are scalping the market, that's when you use the 1 minute time frame, but use the 5 minutes or the 15 minutes. In this case, I will use the 15 minutes because that's what I use. I use the 15 minutes to get my entries, to identify potential entries, because the 15 minutes is not too early and it's not too late. For me, it gives me the right information I need, and that's why I keep using it. I use the 4-hour to mark out my level and identify the overall direction of the market. I use the 4-hour to identify the direction of the market. Is the market moving up, down, or moving sideways? So we mark out our level and identify the overall direction of the market using the 4-hour time frame. Then we use the 1-hour time frame to see the behavior of the candles. What was the candle doing at that point, at that time? Then the 15 minutes, use the 15 minutes to get our entry. So this, we're on the 15 minutes here. So if I was to take a buy, I will have set a buy stop entry around below these candles here, these three candles. I will have set the sell stop, a buy stop order here, so that I'll get triggering when price start pushing up back to these highs. So I use the 15 minutes for my entries. So that's how I approach the markets and take my trades. So if you're currently on the live stream, you should like the stream, subscribe to the channel. It does a lot more for the channel you can imagine. If you're gaining value, like the stream. That's how I know you are gaining value from this, and I'll keep doing this because of you guys. Remember, we have 3 to 4 live streams every day now on this stream, because most people complain, most of my members complain about, because we all have different time zones. So most of us complain about not having the opportunity to trade with me on the live stream. I was only trading for 2 hours a day. I was only having 2 streams in a day. But because of the complaint, I want to meet up with other members around the world who have different time zones and usually trade is not convenient for them. So we have 4 streams now in a day. So don't worry, if you're not on this stream, we'll still have another 3 streams later in the day. So that everyone can benefit from this. And I said there's a WhatsApp link in the video description. If you have any question or you have any inquiry you want to make, you can chat me up after the live stream on WhatsApp, and I'll get back to you as soon as possible. And we also have a free Telegram group which we share educational video, we share signals occasionally on gold, pound JPY, but we also have a VIP signal group. That's a paid membership. We have 2. So we have the free Telegram group, which is free. We drop signal occasionally with educational content, and the VIP group, that one is paid membership. It's a monthly paid membership. So whichever one you want to be part of, chat me up on WhatsApp. Check the video description. There's a WhatsApp link. You can chat with me directly and I'll get back to you. So as I said, if you're just joining us, all we are waiting for is a break of this level. As you can see, these arrows we have marked, we want a break of the level, a retest of this area, and it's after the retest, once we start, and after the break, once we start identifying failure to break back into structure through multiple week rejections, that's when you scale to your 15 minutes. When we start seeing 15 minutes weak rejection, that's when we sell the market back down to some of this area. Or you can set a sell stop order if you are not going to be on your chart, or if you're a breakout trader, if you're not going to be on your chart monitoring the move, you can set a sell stop below this level, so that you can only get trigger in when price start pushing down in your direction. So that's how you take the trade on gold. So that's the analysis. As I always said, price push in 3 phases. We have the push phase, an exhaustion or pullback, then a continuation. So that's how the market moves. As you can see here on the 1 hour time frame, this bearish candle was the push phase, and this bullish candle was a pullback. So this new candle that is opening, this is a continuation. So that's how the market moves. The market moves in 3 phases. push phase, exhaustion, and a continuation. So that's how the market moves. So right now, I say if you have any question, please chat me up after the live stream so that I can get back to you as soon as possible. Right now I'm busy on the stream, so we can't chat right now. Once I end the live stream, that's when you can chat me up on WhatsApp. So thank you guys for the likes. I can see many likes. So, but if you haven't liked the stream and you're on the live stream, I think you should feel guilty. It takes you a second to do that, but it does a lot more. If you're gaining value from this, I think that's all I care about. If one or two of you guys can get inspired and gain one or two knowledge from this, that's all I care about. Remember, if you have the knowledge, you should share, because that's how we evolve as human beings, through learning from one another. That is the breakdown on gold. So we are going to let the trade run now. We are going to let the market do what it wants to do and see if you can get a trade. Remember, always have a plan, and if your plan plays out, take your trades. So we have a plan now. We are waiting for a break, and if the plan plays out, that's the only time I'm taking the trades. Sorry about that noise. So right now we are going to play the waiting game and see what happens. So welcome back, traders. Happy trading. If you are currently on the live stream, you should like the stream, subscribe if you're a new viewer. It does a lot more for the channel, and it shows me that you guys are really gaining value from this video. So for the benefit of those who are not early on the live stream, let me still do a recap on our breakdown of gold trade. So when we came to our charts, we first drew out our levels from the 4-hour time frame. We drew our tops and our tops and our bottom level, and we consider this a ranging market or consolidation because price is moving sideways. It's not making any clean direction. Yes, it doesn't have a clean directional bias, and some of you might identify this as a double top pattern. It's a double top pattern. If you have been trading for a while, you understand this pattern. But right now, price is currently at a key level which we have drawn, and that is we are waiting for a clean break of this level to for the candle to close strong below, to break the level, close, come back for a retest, and it's after the retest that's when we enter the trade, because that's where your best trader is going to come from, after the retest. Or you can set the sell stop order below this, below the level, so that you get trigger in. If you are not going to be on your chart, you can set your sell stop below the level so that you get trigger into the trade when price start pushing down in your direction. So that's the use of a sell stop order. If you are not going to be on your chart monitoring the trade, use the sell stop. Or if you're a breakout trader, use the sell stop. So the next, we scale down to the 1-hour time frame. You will see the behavior of the market, and as I told you guys, the market moves in 3 phases. We have the push phase, the exhaustion phase, these bullish candles, and now we're anticipating a continuation to happen. And the continuation, we expect price to break the level during the continuation and close below the level. So as you all know, I told you guys your best trades are going to come at key levels. At key levels, that's where your best trade is going to come from. And I share with you guys the trade we took yesterday on the live stream. If you were on the live stream, is it today? Yeah, if you're on the live stream, this was a trade we caught. We used the sell stop order. We had a 3.5 pip stop loss, and we made almost a 1 to 5% on this trade alone. So this is the beauty of using a sell stop and taking your trades at key levels. It gives you a higher probability trade. So we set the sell stop order around this level, and price start pushing in our direction. It broke the level and continued down as we anticipated. And as I always said, you are not going to win all of your trades. You first need to accept your losses, make peace with your losses. That's the only time you are really going to start seeing progress in your trading. If you're always afraid of taking trades because you don't want to lose, you are not going to succeed. That's just the plain truth. One practice I do is, even though I have a lot of experience in the market and I've been trading for over 7 years now, one thing I still do is, before I take a trade, I accept the loss mentally. It's not about being pessimistic, but once you first accept the loss mentally, you are going to be more free. You won't be emotionally attached to a trade. Most times when you see me in a trade that is moving in profit, most of you guys ask me, why don't I close the trade while I'm in profit? And I told you guys, when I enter the market, I've already know my target. I know what I'm taking out of the market, either a 1 to 2 or a 1 to 3 or more. So even though I'm in profit, I don't close my trade very early, or um yeah, I don't close my trade very early and leave money on the table, because I've accepted that loss. If I lose the trade, that's fine. I accepted the loss mentally. I'm not emotionally attached to my trade. And this idea of removing emotion from trade is the biggest misconception. It's not possible to remove emotion from trade or from decision making. Emotion is a big part of decision making process. So you can only discipline your emotions and be rational. So that's what I did. I hold my trade. If I say I'm going to hold it for a 1 to 3, that's what I'm doing. I don't go back on my word. So that's what you need to be doing if you want to be trading for a long time, and if you really want to achieve your financial freedom trading forex. These are the things. They seems like little things, but putting them into practice, when it compounds over time, that's when you are going to see real difference and real success in forex. And as I always said, imagine being traveling the world with just your phone or your MacBook, just trading your way and having the opportunity to travel around the world and make money at the same time with just your phone or your MacBook. Or another, and imagine another scenario: you trade for 1 to 2 hours a day, and you have the remaining hours to chase your passions, with your loved ones. So that's the dream. But you won't get there by just closing your trade early and you don't even have a trading plan in place. If you're a trader and if you're on the live stream, if you don't have a trading plan, the, the hardest truth is that you are not really ready for success. You are not ready yet. You just want it. You are not ready for it, because your trading plan is like a blueprint. It's like your system. It mitigates your losses and it increases your odds and edge in the market. So if you don't have a trading plan, you are just gambling your way and think you will be a millionaire by a week. That won't happen. You are just living in an illusion. You need to have a trading plan in place. If you don't have a trading plan, I can help you with that. I can help you create a good and effective trading plan. Doesn't matter if you are trading a personal account, 100 account, $100 account, taking a profit challenge. If you don't know how to create a good trading plan, I can help you with that. Help you with risk management, lot sizing. These are the things you need. They are your edge in the market. But don't neglect that. If you don't have your system in place, all the professional traders have a system in place. We all feel the same emotion, but our system keeps us grounded and disciplined, even though we encounter challenges and losses in the market. We don't revenge trade, we don't chase the market. We planned out our trade and wait for it to play out. That's how the professional traders operate. They don't chase the market. They come to their chart, plot out their level, have a plan in place, and wait for their plan to play out. If the plan plays out, they take the trades. If they win, they are laughing all the way to the bank. If they lose, they walk away and look for another opportunity. That's what you need to be doing. And this misconception about trading every day or trading every pair, you are just going to be here for the short time. So if you don't currently have two pairs you trade, if you just trade everything, go across the board looking for a trade, you are not going to succeed. Let me just be plainly honest with you guys. Have at least a maximum of two pairs you trade. If you don't have trades, if there's no good or high probability trade on those pairs, you should walk away and wait for another opportunity. But going across the charts looking for pairs to trade, you are not going to be here for long. You're just gambling your way. So these seems like simple things, but they are very important if you put them into practice. So as I said, I have a Telegram group where I share motivational and educational videos, and I drop signals occasionally on the Telegram free group. And I also have a VIP signal group where I send out daily signals on gold and other exotic pairs, but that's a paid membership group. So if you want to join the free Telegram or the paid VIP group, check out the link in the video description. There's a WhatsApp link. Chat me up after the stream. I'm busy now, I won't respond to you now, but I'll respond to you as soon as I'm done with the stream. And I think that's it. So we are still waiting for the break of this level to look for a trade. Right now we are doing nothing, and that's another tip. Not because you're on your chart doesn't mean that you should take a trade whenever you come to your chart. Wait for your plan to play out. Wait for good high probability trades. So that's what we are doing. We are waiting for our plan to play out. We are not eager to take a buy or a sell. If our plan plays out, we take the trade. So let's continue waiting. So welcome back traders. So on pound JPY, the same thing, the market is moving sideways. We don't have a clean directional bias on pound JPY. Price is just moving sideways. But as I said, I personally don't trade the ranging market. So, but if you still want to trade this, I think the market has moved. Let me see. If you still want to trade this, that's fine. But I don't trade. I don't trade a ranging market. And the market has already pushed. So any sell you take, remember your safest stop loss must be above this level. You can place your stop loss above these weak areas, these candles here, but it's a high probability price might still come back to that level. So if you take any sell here, it's a high probability price might still come back to this level or this level. So your safest stop loss will be above the key level. I don't trade, as I said, I don't trade this ranging market. It's a low probability trades on my behalf, on my own side. That's why I don't trade it. But even though I'm going to trade this, what I'll be looking for is for price to come back to the highs. For price to come back to this level, this weak area, this level here, so that I can use a sell stop order. But right now I'm not selling this. I'm waiting for price to come back to push deep into the level and start showing me sign of weak rejection like this or this, for me to set a sell stop order slightly below the level. But for now I'm not selling this. But if you're currently in the sell, that's fine. Just make sure your stop loss is above these candles, or if you are using a more moderate lot sizing, you can safely adjust it and place your stop loss above the key level. That's the safest. So but we know for sure that price is going to go down, but before I take the sell, I need price to come back to the level, this level here. So that's how I trade. I don't go against my trading plan. That's why I keep stressing the fact of having a good trading plan. And for gold is now pushing down. We still want price to break this level for us to look for a trading opportunity. If price break the level, we'll wait for a retest at that level for a continuation down. So that's all we are waiting for on gold. I don't want to set a sell stop order yet. I want a clean break. I want a clean break of that level. I want a clean break to plan my trade on gold. You know, gold is very volatile and it high spreads. So don't want to be very careful when you trade gold. And if you are trading sorry about that. If you are taking a profile challenge, one of the tips I will advise you is take one single trade at a time. If you are taking a profile challenge, take one single trade at a time. Don't stack up positions. Don't stack up positions. It's very bad, and you can hit your daily limit immediately or when price go against you. So always have a as you can see, have a risk 1% of your total account size Risk 1% of your account total size. That's if you are trading. If you are taking a profit challenge, only risk 1%. When you start gaining profits, if you're up in profit 2%, 3% in profit, that's the only time you can increase your lot size to 1.5 or 2%. But if you're not in profit, you should always risk 1% on your total account size and keep your risks constant. Keep your risks constant. Never indulge in the habit of adjusting your lot size whenever you take a trade. When you lose a trade, you place another trade and you increase the lot size. That's a sure way of blowing up that account and bridging your hitting your daily limit on your profit challenges. So avoid doing that. Keep your risks constant. Risk 1%. Never adjust your stop loss. The stop loss you start you the yeah, the stop when you take a trade and you set the a stop loss, as long as it's in a safe place, and even though price is pushing against you, never start the habit of adjusting the stop loss. For example, if I take this trade here and place my stop loss around this level, if price start pulling back on me, you feel the need to adjust the stop loss so that you don't get stopped out. But that's a bad habit in forex to indulge in. Once you start doing it, it's like an addiction. You continue doing it. Remember, losses are part of trading. You are not going to eliminate 100% losses from your trade. Losses are part of the business. They are the same side of they are the opposite side of the same coin. Win and losses, they are part of trade. You can't have a coin that have only one side. It's not possible. So it's the same side of the opposite coin. Remember, it's a numbers game. As long as you are doing the right thing, you are not trading against the trend, you have a good risk management, and you are risking only 1% of your total account size, it's impossible not to make money in forex or to pass your profit challenges. As long as you don't go against your trading plan, you don't overtrade, you don't revenge trade, you don't constantly chase the market, you wait for the market to come to you, it's impossible not to be successful in forex. I'm just telling you this out of experience. I know what I'm saying. I have 7 years in trading now. I've been trading for 7 years. I've done a lot of mistakes and I'm still making sums, and that's why I'm sharing this with you guys. I'm speaking from a position of experience. Don't start the habit of adjusting your stop loss. It's a sure way to failure. Once you set your stop loss, allow it. And that's the use of the stop loss, to mitigate your losses, to cut out your losses. And this sends us to another point of when you take a trade, you are constantly on your chart, emotion runs high. Because when you take a sell or a buy and price is pushing in the opposite direction, and you can see that you are in losing position, as long as you're on your chart, emotions run high and you can get irrational. So if you are not there yet, if you haven't know how to control your emotions when you are on your chart, it's a very bad practice to check your chart every minute. Because once you take a trade, there is this need to always monitor the trade like a baby, to always check if the market is pushing your direction or not. And that's why when price start pushing, we have a bad connection. So feedback is very important. Whenever you lose a trade, reevaluate what you did wrong and come back strongly. So I think We'll be ending the stream now. The network is a little bit bad at this point. I will still be having another in an hour time. We'll still have another stream in an hour time.